Russia contains over 30% of all natural resources in the world. Yet, what we are witnessing is Russia quietly taking control of resources outside of its borders. As New York Times bestselling author Marin Katusa put it, it is the Putinization of commodities, noting that with some commodities, like uranium, Russia produces more uranium within the US border than the US does for itself, even though the US currently imports 90% of its uranium supplies. In Europe, Russia has used the export of natural gas as a weapon to fight back against the West. Europe gets a third of its gas from Russia and is in no position to go toe-to-toe with Putin. Policymakers still remember the shocks in 2006 and 2009 when Russia cut supplies to Ukraine, causing EU nations to find alternative supplies. When Russia seized Crimea, it acquired not just the landmass, but also the sea of fuel reserves, potentially worth trillions of dollars. Russia is also one of the world's largest oil producers, essentially tied with the US and Saudi Arabia. It is no surprise that with low oil prices, Russia decided it would be a prudent time to enter the 54-month-old conflict in Syria with a direct military intervention. FutureMoneyTrends.com sees natural resource wars brewing and becoming an increasing threat, and may be the grand finale to an already intensified currency war amongst the world's top economies. Most wars in human history, at their core, is a fight over natural resources. The Pearl Harbor strike was Japan's effort to knock the US out of the war and get access to commodities in South Asia. Japan also enslaved millions of Asians to extract and refine commodities during the war. The German invasion of Russia during World War II was to gain access to the grain belts of southern Russia and oil wells. Iraq's invasion of Kuwait not only helped them control their oil, but having the ability to curb their production in order to help increase the price of oil. Even the Pentagon in 2002 told Fortune magazine that World War III would be a fight over basic human needs, food and other commodities. The world is living in a time where ore grades in some metals have collapsed by 95% in the past 20 years. We've seen cheap production and discovery almost across the board for metals and energy. Scarce, non-renewable commodities are permanently disappearing, and frankly, there are no new frontiers, at least not at today's low prices. We also have India, China, Africa, and South America looking to become westernized economies and lifestyles, an objective that will take a considerable amount of resources. Credit is ever expanding, but the resources we pull out of the ground are finite. It's why any investor looking to capitalize on this inevitable rise in commodity prices must be disciplined in only owning companies in safe jurisdictions where they are proven to be mining friendly. FutureMoneyTrends.com is recommending investors avoid producers who will suffer from volatility, debt, and violent swings in their earnings, as well as the nationalization of some of their projects. Instead, focus on low-risk, high-reward exploration plays, acquisition companies, and royalty streams. These businesses act as a call option with no expiration, plus you get all the upside for any new discovery, which even in a bear market, discovery has still been rewarded tremendously. Now is not the time to speculate. Now is the time to attach yourself to winners. Be strategic and become a disciplined investor, preserving your capital and positioning yourself to profit. Learn more at FutureMoneyTrends.com/hard asset. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at FutureMoneyTrends.com/hard asset.